Hey guys, welcome to the pod team. My name is AJ.
Hello guys, and this is Lex. Welcome back to another video.
So today's video, we're gonna go through from the previous videos rate hike, and we're gonna see what happened with that and how the market responded. Let's get right into it. So I'm gonna share the screen right now. Let's go to the QQQ. As you can see, it was a very choppy session during the beginning of the week. We had the market going up, then we had the market going down, and then on the day of the rate hike, it was a very choppy session going down, up, down. And then at 2 p.m., when the Fed said, hey, we're going to raise the rate by 0.25 basis point, the market reacted very bullish because that was very expected. So that caused a massive 5% gain from yesterday to today at the NASDAQ QQQ. So today the market was up 3.25%. S&P was up 1.47%. But the Dow, for some reason, did not pick up. It was very weird. Usually, when this kind of reaction happens, all three markets are very, very bullish. So, maybe somebody knew something. And with that being said, as you can see, Google after hours is down 4.93%. Amazon is down 5%. Apple is down another 3%. These three major tech companies all missed earnings. They did not do well profit wise. And let's get into why they did not do good profit wise. I'm going to show you Apple's earnings report. As you can see, this year it did only $96 billion compared to last year, which was $104 billion. So the total net sales was missed. Total cost of sales went down just because there was a lack of products being made. Like I said in the previous video, Apple's number one reason of why it did not meet the earnings was because of China having COVID lockdowns. So you could see in the future, maybe right now the production has been stable. Tim Cook has said that, now we're back on track. So maybe next quarter, you can see this as a buying opportunity right now, seeing how the market does tomorrow. As you can see, I want to show you guys one other thing. We'll go back to the charts. I want to show you guys Snapchat. So Snapchat missed its earnings. Do you see this, Lex? It was a 20% drop, close to no, sorry, 20 to 15% drop.
That's
And
a big
now it's
drop.
back right where it started, right before its earnings. So this is only one example of one company. There are multiple companies that missed its earnings. For example, another one that did was Intel. As you can see, let's go to a 30-minute. So it shows, as you can see, there was a big drop in Intel too. But give it a couple of 3-4 days, it's right back where it was. That you can factor the reason why, as you can see, the QQQ is like in a bullish trend right now. Since its January lows in the beginning of the year, it has gone up 20%. When it does a 20% indication, that is when it enters a bull market. The Nasdaq has dropped more than the S&P and Dow Jones last year. If you were to pull up the chart, you can see the 1 year, it had the biggest drop if you compare it to S&P or Dow Jones. So the Nasdaq has a way to catch up. So if I was to invest, I would go invest in the QQQ right now. But am I saying we're out of danger? Are we out of recession? I don't know. I mean, the market is factoring greed right now, and I want to show you that chart because that's a very important chart to look at whenever you do want to invest in something. It's the fear and greed index. And this right now is saying greed. A month ago, it was saying fear. A year ago, especially, it was saying fear. But now we're on the greed track. So when people when you probably might have heard this quote sorry. When people are scared and in fear, that's when you buy. But when it's extremely greedy, I don't know if you want to, you have to be smart. And if there's a position you're happy in that you think you made a lot of money, hey, close the position. You don't want to like YOLO it all the way. You don't know what kind of data we might get in next week or next month. So
So
if
that
you guys made a good profit, I would close positions. I made good profits these past 2 days. I closed.
so question, that greed section there, is that a good thing?
Yeah, if you're a bull, that's a very good thing. If you're a
Okay.
bear, it's not a good thing.
Okay.
So, going into the other earnings, Google did not do well. Amazon also, as you can see, Amazon missed on its EPS, but it beat in revenue because it had one of the highest. Uh, I think it recorded the highest sales this past Christmas, which you would seem odd that why is it going down? Well, the revenue beat, but the profit margins weren't as well as it was expected. And also, Amazon is a big investor in Rivian and they're losing money. So it was down 2 billion in Rivian stock. So that is a major factor. So if you see if Amazon's down, you're most likely to bet that, let's see, pull up Rivian. Rivian would be down. And exactly, Rivian is down. It is down 3.5% right now. So looking into Rivian's earnings, you might be a scared investor. So that's why you see a sell-off in the after hours. And another stock that had earnings today was Starbucks. Starbucks was down big after hours. Usually it's not a big mover, but it went down to 103, but it based, as you can see, after hours is based at 107. So you might see it come back. And if on all of those tech stocks, besides the tech stocks, if there was a stock I would bet my money on, it would be Starbucks. The reason why Starbucks didn't perform well because they spend a lot of money on making stores in China. Like they made tons of stores in China, and because like Apple, they had COVID lockdowns. So, people weren't going out, people weren't spending the money. You can probably see the next quarter or the next a quarter after, people are going to be going back out. They're going to be spending the money, and Starbucks opened a whole new section in Asia. So, see Starbucks stock, gradually go up. As you can see, Starbucks still has, it was close to its 52-week high. So it made a nice recovery over here from, January lows and 2022 lows. So see this stock probably recover. That would be my bet on it. And I think you can see a lot of profit in this company because as well, when you drink coffee, at home you can make it for like 50 cents. But if you go to Starbucks, it's probably like $6, $7. So the profit margin on coffee is very, very well. So see Starbucks, grow. And looking forward to the market, I would not bet my money against Apple. Apple is a very hard company if you're a bear to make it go down. So if you are a bear and going against Apple, good luck because as you can see this, if we're back into a bullish market, I guarantee you Apple will be coming back strong and quick because right now it's still at this very important line that it does not break off of. So I would not want to bet against Apple if I was a bear. So
But basically, maybe the market is going to change if the rate increase again. Would
so
that be something that's going to be a better fit for the market,
so
for the stock market?
yeah, a lot of people are saying that, with all these rate hikes, you can see the stock market probably plunge and stuff. That's true at a certain level, but there has to be a lot of factors that go into it. The rate hikes are really something to slow the market down, like I said. It raises your credit card rates, home rates, auto rates, all those. Whenever you get a loan, it definitely brings it up. So it's trying to slow down the market. That is a factor to take into. But I think the stock market right now has priced in all that. It has to be like a big event or a big, like, what they say, catastrophic event to pull the market down. Because you got to remember that we did put like at least $5 trillion in the past 3 years into, like, in everyone's hands, with all the stimulus money. So it's very hard to put the stock market down what bears aren't understanding. But if you put into factor that the credit card debt is high, that a lot of people are using uh high payments on their houses and auto loans, sooner or later that will be factoring in. So like if people are expecting a 2023 recession and they don't get one, it could be very dangerous for the future of the stock market. Maybe we might see a big depression coming instead of a recession.
But still, let's say, even though the rate went up 0.25 right now, people can still go buy a car, maybe buy a house, because there's still a chance that this is gonna go up again, maybe one or twice or maybe three times
Yeah,
through the year.
so right now they're expected two more rate hikes. So if that brings the Fed to a stop after that, because if they're happy with whatever data they're seeing, and if they bring down inflation to like 2 to 3%, they might gradually stop it. So we might see, like, another bull run happening. But if inflation is coming back and it doesn't work, then you might see towards the end of the year that, hey, the Fed's like, hey, we know what, we're gonna increase the rates even more, and then that's when you're gonna see like a whole, like, it's like,
Market go down.
yeah. I mean, they're
Yeah.
like, in the beginning of the month, there was a lot of plenty of buying opportunities. Like, as you can see, Tesla was at like at $102, $104. Now it's at like today it went up to like $195. Facebook was at like $88. Now it's like it topped at like 197 today. So in within a month, if you bought like even a couple hundred shares, you made a lot of money. So like I
Make a good
said,
money.
going forward, we're gonna see more data. Be careful with your profits. If you made good money, try to sell some. Don't be too greedy, because whenever the factor is in greed, yes, you can make a lot of money, but you always got to be careful too, because as fast as it goes up, it can come back as fast down.
Really good information for everybody that wants to know what's going on in the market. Maybe somebody's planning to buy a house, get a car, credit card, uh, interest rate, all that good stuff. As always, man, thank you for that information.
I
You're
appreciate it.
good. The
Appreciate
way you
it.
explain it is, I don't know much about it, so that's why I keep listening.
So yeah,
But I'll learn.
like Lex, we were talking about this. I think me and Lex are gonna start, like, a class. And if anyone has questions about how to invest in the stock market, or what is what, and what kind of factors I see, and what kind of, like, things I've learned, Lex is willing to ask all the questions. And if anybody else has a different question, Lex can ask it for you. Just gotta ask your question on the comments, like and subscribe always, so we can make for more videos for you guys in the future.
Yes. And AJ, once again, thank you for this video. I hope people like it and keep coming back uh, for the next video. Hopefully, uh, they learn the same way I do, because it shows that you know what you're talking about.
Yeah, I've been an options trader for like 4 years. It's very good money on the side if you really are very dedicated to it.
All right, you guys, you heard that. He's making some money, so he's not just saying, he's doing it.
Yeah.
Uh, and that's a great thing, because we learn from somebody that's doing it. And again, just go ahead and, you know, keep keep with us. Come back. hopefully we're gonna have another video that you guys going to like. Just also give us a like and leave comments. So hopefully we're going to read them and listen to what you guys have to say.
All right, guys, take care. Bye bye.
Thank you.